Hello, friends. Hey, it's Jamie with Reece Homes here. Hope your April is off to a great start and you're looking forward to spring. First and foremost, just wanted to say thank you to everyone who took a moment and voted for the team for Best of Edmonds. We're looking forward to hearing the results from My Edmonds News and looking forward to good news there. And thank you again for taking time to support us. Now let's get right into the market and see how things are going. So the first question that we get a lot these days is when is the top of the market? When's the selling season, right? And what we can tell you is the selling season is pretty consistent. The top month for new listings is May in most of the years. So 6 out of the last 10 years, it's been May. 3 out of the last 10 years, it's been June. And then 1 year in 2020, it was July. And that was principally because everybody just kind of got their plans put on hold as COVID took hold in 2020. Now, let's see market activity for this year versus last year. What we can see is that Omicron kind of did a number on us in January and February and kind of had that same effect that we had in March of 2020, where right now we're seeing that we're down 24% compared to last year. In terms of number of homes that have come to market, we're down about 13% for closed sales, and we're down only about 5% on pending sales. Now, pending sales are a leading indicator of what's going to happen in the future, right? So what we expect here is that this trend, we're getting back to what we had seen back in 2021, which I think is a bit of good news overall. Now, the biggest concern that people are having right now is interest rates, right? And I can totally understand it. Interest rates have a great deal of impact on affordability of homes. Well, let's look first and foremost at what economists are expecting overall. These are the top 4 economists from the top 4 organizations that deal with mortgages: Freddie Mac and Fannie Mae, the Mortgage Bankers Association and the National Association of Realtors, and they range between about 3.7 and 4.4% over the next year. And if we average out everybody's opinions, we get right into that 4% range overall. And if we look at this historically over the last 5 years, as we'd seen from 2016 to 2019, as the economy continued to grow and recover and get out of the downturn that we had in 2008, right, mortgage rates naturally started to climb as the economy recovered. Then, of course, COVID came along, dropped them down so that we could have a better economic recovery coming out of COVID. And now we're starting to get back to those historical norms that are probably going to be in the mid 4 to 5 to maybe even 6% range as the economy fully recovers. That said, as we look at the predictions between 2022 and 2023 being about 4%, we're right in line with what we've seen over the last few years. So this really isn't a huge concern overall, and we don't really see us going back to the 2.75% rates or the 3% rates anytime soon. And what it would take to get back there is a big concern for the economy overall. So we kind of hope that we don't get back there, right? Now, let's look at bubble concerns, because that is another one as we feel this shifting market, and certainly a lot of stories about a shifting market out there, is are we expecting a big downturn in prices, right? And that, from everything that we can read, at least in our area, we're not expecting that, principally because mortgage availability isn't nearly as liberal as it was back in 2005 to 2008. Since that downturn, the mortgage industry has gotten a lot more disciplined about how they give out mortgages, whether it's to owner occupants or investors. So what we're seeing here is that everybody is getting a mortgage, or almost everybody who's getting a mortgage has really great qualifications and should be able to maintain those payments as they move forward into the future. So what's next? We see a strong moderating seller's market for the rest of the year. And when we say moderating seller's market, we just expect more inventory to come available, right? And we expect a number of buyers, and maybe not making the most rational decision out there, but a number of buyers just with those 4% rates, they're just going to say, hey, I'm going to hold off. Maybe 3% rates will come back. And that'll take a little bit of competition out of the market. For those buyers, for those who are thinking that that could be a chance, I think the odds are really long on that. So if you're hoping for that, you might end up losing a lot more money over time than you would gain from that perspective. Okay. Certainly, there's going to be a lot of stories of uncertainty and bubbles and things like that in the media. And I would just draw you back to search a little bit deeper before you start to feel those feelings of uncertainty, especially in the Puget Sound market where we almost will always have a constraint of inventory. We just can't build enough homes in the land that we have for the demand that we have. Okay. And then finally, there, as in every market, there are opportunities for sellers and buyers. You just have to dig into the market and figure out if it's the opportunity for you. So if you're feeling like your home's too small, not in the right neighborhood, or you're looking for something a little bit different, or you're wanting to buy your first investment or your first home, give us a call. We can interview you a bit, kind of find out what your goals and plans are, and see if today's market's right for you. Thanks for watching. Hope you have a wonderful spring, and we look forward to talking to you soon. Take care, guys.